We have breaking news. The Bank of Canada has cut its key rate by 25 basis points. It's the first time in 4 years the central bank has lowered the rate. Before today, the rate was sitting at 5%, the highest it's been since 2001. Well, let's bring in BNN Bloomberg's Andrew Bell to talk about this. This was widely expected.
Yeah.
Let's talk about this and how this is going to impact trade, the economy, housing.
In theory, it'll help the economy, of course, because it makes it cheaper for businesses to borrow to invest, consumers to borrow to consume, although it will take a while to work its way through the system. The Bank of Canada Governor, Tiff Macklem, holding the door open to more interest rate cuts, but as is the way, the way central bankers are, Jamie, like economists on the one hand, on the other, he is warning that house price inflation and global tension, if it pushes up oil, for example, could lead to more inflation. And of course, the implication there is he might have to hold off from more interest rate cuts. But as expected, Canadian dollar weak, going below 73 cents, actually, US, because, of course, when you cut interest rates, it tends to bring short-term money out of your currency. People look for a higher return elsewhere.
And we were actually just speaking with the chief market analyst for the Toronto Regional Real Estate Board earlier today, talking about the fact that home sales year over year in May were down 22%.
Yeah.
And a lot of those buyers potentially were just, waiting, sitting on the sidelines, anticipating this rate cut. It's going to be interesting to see what happens in the months moving forward now that there's cheaper money to be had.
Yeah, but only marginally. As you know, there's been this massive run-up in interest rates over the past 2 years. But you're right. Of course, this will tend to stimulate the housing market. We actually talked to an economist from Desjardins yesterday who warned that you might think this would help house price construction because it's cheaper for developers to get financing. We said that could take a long time because we've seen such a massive inflation in home construction costs. Desjardins reckons that between 2020 and this year, they went up, the cost of building housing went up 60%. So the whole economics of building houses right now is questionable, partly because of expensive land and big local government charges. Of course, they don't get enough money from the provinces, so it's a vicious cycle. So, in fact, Canada is not building more homes right now. Our rate of home building is down from 2 or 3 years ago, partly because of that cost inflation. So the actual new supply of housing will take a while.
Well, we appreciate the updates. BNN Bloomberg's Andrew Bell, thank you.
Thanks a million, Jamie.